Taxand Tax Updates. Disclaimer. The following information is intended only to be a guide. It must not be relied on in or applied to specific situations without previously seeking proper professional advice. Tax aspects of real estate companies. The real estate business has become one of the main investment targets for domestic and foreign investors. Based on a quote from Business.com published on July 29, 2024, that refers to the data from the Ministry of Investment or Investment Coordinating Board or BKPM, investment realization in the real estate sector grew by 13.9% compared to the first quarter of 2024. Local investment or domestic investment in the real estate sector ranked third highest targeted by investors. Thus, investors who want to invest in the real estate sector should know the taxation aspects related to the real estate industry in Indonesia. 1. Final income tax. Real estate companies in Indonesia are subject to final income tax on the income they receive. Although the imposition of final income tax provides a simpler tax calculation, the imposition of final income tax causes real estate companies to still have to pay taxes, even though they experience losses in their business, because the imposition of costs in calculating taxable income does not apply to real estate companies whose main business activities involve the transfer or rent of land and/or buildings. The applicable final income tax rates are as follows. 2.5% of the gross amount of the transfer value of land and/or building rights, other than simple houses or simple apartments, which are subject to final income tax of 1%. 10% of the gross amount of the rental value of land and/or buildings. Final income tax is also imposed on maintenance costs, upkeep costs, security costs, service costs, and other facility costs, whether the agreement is made separately or together. The transfer value of land and/or building rights for the calculation of the tax basis for final income tax of the 2.5% owed is as follows. 1. In the transfer of rights to the government, the value is based on the decision of an authorized official. 2. For auctions, the value is according to the auction minutes. 3. Through sales and purchases influenced by special relationships other than transfers as referred to in point 1 and 2, the value is that of the amount to be received or obtained. 4. Through sales and purchases that are not influenced by special relationships other than the transfers as referred to in point 1 and 2, the basis will be of the actual value received or obtained. 5. Through the exchange, release of rights, transfer of rights, gift, inheritance, or other means agreed upon by the parties, the basis will be the market value. Individuals or companies that receive or obtain income from the transfer of rights to land and/or buildings are required to pay the income tax payable themselves before the deed, decision, agreement, or auction minutes are signed by an authorized official. Meanwhile, for individuals or companies that receive or obtain income from the transfer of rights to land and/or buildings through the sale and purchase or exchange to the government, income tax is collected by the government treasurer or the official who makes the payment or the official who approves the exchange. Income tax payable is due when part or the entirety of the payment is received, such as the down payment, interest, or other levies that must be paid by the buyer. Payment of income tax payable on income from changes to a sale and purchase binding agreement or PPJB for land and/or buildings is made through self-payment by the individual or company as the buyer whose name is listed in the PPJB before the change or addendum of the PPJB occurs. Meanwhile, for income derived from renting land and/or buildings, the final income tax of 10% owed must be made through self-payment if the lessee is not a tax withholding agent, especially if the lessee is an individual who is not appointed as a tax withholding agent. 2. Value-added tax, or VAT. Real estate companies whose gross turnover exceeds 4.8 billion Indonesian rupiah within one fiscal year are required to register as taxable entrepreneurs and are required to collect VAT of 11%, with the possibility of an increase in VAT rate to 12% in 2025. If the buyer is a taxable entrepreneur, the VAT collected can be credited as input tax on the condition that the land and/or building is used for business activities that are subject to VAT and the input tax invoice meets the provisions of Article 9, Paragraph 8 of the VAT law. The obligation to collect VAT also applies to real estate companies that rent land and/or buildings based on the total amount charged to the tenant, including service fees and other costs. There are significant and beneficial changes for taxpayers regarding the provisions for VAT crediting based on the Job Creation Law No. 11, Year 2022, as amended through Law No. 6, Year 2023, where based on Article 9, Paragraph 2A, that input tax obtained by a taxable entrepreneur before the commercial production can be credited and is no longer limited to the acquisition of capital goods. Thus, crediting input tax on the acquisition of land before the taxable entrepreneur conducts a delivery that is subject to VAT is no longer a problem for real estate companies. 3. Sales tax on luxury goods, or PPNBM. In addition to the imposition of VAT, PPNBM with a rate of 20% will also be imposed on the transfer value of luxury goods in the form of houses, apartments, condominiums, townhouses, and the like, with a selling price of 30 billion Indonesian rupiah or more. PPNBM is only imposed once, specifically at the time of delivery by the entrepreneur who produces the goods. Meanwhile, PPNBM is not imposed on the rent of land and/or buildings. 4. Article 22 Income Tax on the Sale of Luxury Goods. In addition to being subject to VAT and PPNBM, the sale of the following very luxurious goods is also subject to Article 22 income tax of 1% of the sales value, excluding VAT and PPNBM. 1. Houses and their land, with a selling or transfer price of more than 30 billion Indonesian rupiah or a building area of more than 400 square meters. 2. Apartments, condominiums, and the like, with a selling or transfer value of more than 30 billion Indonesian rupiah or a building area of more than 150 square meters. Article 22 income tax is tax paid in advance and can be calculated as tax credit in calculating the income tax payable in the annual tax return in the same year when the taxpayer obtains goods that are classified as very luxurious. 5. Acquisition duty of land and building rights, or BPHTB. BPHTB is imposed on buyers for all acquisitions of land and/or buildings, both in new and old conditions. The maximum BPHTB rate is 5% as stipulated by regional regulations. Unlike final income tax, the basis for calculating the taxable object of land and/or buildings, or NJOP, is the higher value between the actual transaction price as stated in the sale and purchase agreement, auction minutes, or deed of gift or inheritance, or NJOP as the basis in the year of the transaction. 6. Land and Building Tax, or PBB. The subject of PBB is an individual or entity that has rights or obtains benefits from land and/or buildings. The maximum PBB rate is 0.5%, which is determined through regional regulations and is calculated based on the NJOP deducted by the selling value of non-taxable objects, or NJOP-TKP, of the land and/or buildings. PBB is payable annually based on the tax due notification letter, or SPPT, issued by the regional government. Thank you for listening to PB Taxand Tax Updates.